I'm delighted to be here today. I spent quite a lot of time talking to fund managers of many of the largest funds in the world at different times, and over the last 6 or 7 years, the conversation has changed, but the issues have remained fundamentally the same. And I want to look at three of the biggest issues that face us, I believe. But before I do, I'm a little worried because in my first training, I am a physician, a doctor of medicine, and there is a medical condition called torticollis, which is when someone has been sitting on a round table like this for too long, looking at someone, and then at the end of the meeting, they have to be taken to hospital because they are in terrible pain. So yes, you've just turned your chair around, that's fine, but I suggest you do too. Okay. Then I will be much more relaxed about the future than I am at the moment about fund management. Okay. I want to talk about the three different crises that there were 8 or 9 years ago, which are still unresolved, and they will continue to drive change and pressure in this industry until they are sorted out. I do not believe that these three will be solved easily, but there are solutions to them, but they are fundamental. And the first, of course, is getting the cash in, and we will see why that is a crisis right now in places like the UK. Secondly, the issue of performance, actually producing the return in a low inflation environment. And I know we can have a big debate about hyperinflation in the future. And then the third, and perhaps the most important of all, is how to hang on to the cash for as long as possible, bearing in mind that people are now living for 45 million years. So if we look at these three issues, the first thing I want to say before we go anywhere is that life matters. For me, I believe passionately in the industry, in what you do. While questions have been raised about the true value of financial services, I say this as a physician, that the task which you are involved in is as serious to the future of our world as health and education. I cannot imagine any sensible, civilized world without banks. I've traveled in places like Zimbabwe, South Africa, Nigeria, and many of the poorest parts of the world where there are no banks, or rather there is very little banking going on, and where there is precious little investment, and it's a kind of hell. You cannot raise money, and whatever you have is stolen from you. So I believe passionately in the preservation of wealth. I believe passionately in your mission, and I believe it's a fundamental importance. Life's too short to do things you don't believe in, isn't it? You know, I trained as a hospice doctor looking after people dying of cancer. That's my first training before I got into futuring, which was through writing 10 books and things like that. And now my life is involved in people like Google, IBM, Hewlett-Packard, ExxonMobil, BP, all the rest. But as a physician, looking after people dying, I learned one thing. Every day matters. You can only be alive once. So let's make sure that we only do things that we really believe in, right? Give me a shout, say hello. You agree with that? Yes? Life's too short to do things you don't believe in. Life's too short to sell things you don't believe in when the future could be so much better. Now, I spend my life at the outer edge of this screen. Most of my clients are involved at the center. They're involved in investment strategy, all kinds of long-term plans and the rest. But it's on this outer edge, this skin of the future, that we see opportunity, risk, innovation, entrepreneurship, and change. This is the most exciting area for me. And some of the things we will look at will be on that outer edge. And of course, outer edge can mean all kinds of things. If you are EasyJet or DHL or BP or whoever you are. But outer edge issues, low probability, but potentially high impact events are happening at an extraordinary frequency. Why? Because there are so many of them. If you have 300 different wildcards inside the business of HSBC, then the statistical chance of one of them going off every 12 months or 3 months is in fact very high. Each of those risks is only a 1% in 100 years risk. It's so unlikely that you would not even perhaps think of a strategy for it. But it will come, or some of these issues will come. Therefore, we plan for uncertainty. Therefore, the days of having only one investment strategy are dead. The days of having only one plan. We need multiple plans, agile, innovative, dynamic, creative leadership in order to keep pace with the change of the future. And nowhere have we seen this more than in the events of the last 3 years, which should not surprise us. I didn't know whether it would be subprime or some other kind of prime, but it was fairly obvious to most of us in the industry that a few things were cooking nicely in a pressure cooker. I remember sitting on a table, as I often do the night before. I did it last night. I sat on a table with some of you, and I sit on a table with a big bank, and we go around in a circle. And what do you do? Oh, retail banking. And what do you do? Oh, private banking. And what do you do? Foreign exchange, thank you. And what do you do? I'm in corporate and wholesale finance. Okay, thank you. What do you do? 5 minutes later, he's still telling me. I used to think it was because my brain was very small that I had no idea what he was talking about. After a couple of years of these kinds of dinners, I suddenly realized something. Instead of feeling threatened, inferior, and inadequate, I started to look at the expressions of the other people on the tables. Sheer confusion. So eventually I started asking people. I do it now whenever I go anywhere. I said, by the way, what's your name? Tassos. Emma, do you have the faintest clue what Tassos has been talking about for the last 20 minutes? No. What about you, Diane? I haven't the faintest idea. So then turn back to Tassos. Forgive me, but I always go to a smiling face. Okay, nothing personal. Go back to Tassos and say, Tassos, do you understand what you're doing? That's just honest truth. I started asking these questions. It started with hedge funds and then it spread. And you know what the answer was? Yes and no. He said, on a good day, he said, I take a day off work and I walk the dog. I tell the boss I won't be in till lunch. If he phones me, I just need to get my head clear. If he was to phone me in the park at 12:45, at that moment, I could probably explain to him in about 125 seconds what I think this product probably does. But the rest of the time, it sort of slips away from me. I said, does your boss understand? No, he hasn't a clue, poor chap. I said, what about the CEO? The CEO? You must be mad. He doesn't understand our department. And then what about the regulators? And then everybody exploded with laughter. It was then, and I'm sure you had similar conversations. And the other thing was, I've been lecturing with banks since 1996, and the number of these people who sit on a table who couldn't tell me in less than 30 seconds what they did started to explode in about 2000, 2001, 2002. Sometimes I would have half the people in the room who didn't seem able to explain what they did. Now, forgive me if you're one of those people. But what we were talking about was an incredible explosion in complexity which dwarfed even the power of supercomputers to recalculate regarding risk. And then the other challenge, of course, well, I'll come to that. But I learned one thing through the subprime and all these other issues that have been going on, which is the future isn't about subprime, it isn't about credit crunch, it's not about Nokia's technology or Google's cleverness. The future is about a single word which will drive just about every investment decision that is made for the future, or rather the impact of that decision, and that is, of course, emotion. It's the passions that we have. It's how we feel, or our best guess about the mood in the colleagues' hearts and minds in our competitor. where we think their emotion will go next. So what about these three crises? And how do they play out in the context of a changing emotional climate? Because this will affect regulation, my friends. It will affect consolidation. It might even affect government policies, which might drive inflation or deflation. We'll see. Trust, I suggest, is very close to emotion. It is a kind of emotion, and is the all you have to sell. Trust is the only product that financial services have ever had to sell, because financial services is a virtual product. It's always about the future. You give me £100, I will give it back to you in a year's time, plus some interest. It's always about the future. I promise you will be able to take out the £100. The bank will still be alive, you understand. Trust. And when trust goes, we are in real trouble. And over the last 10 years, it has been progressive. There's nothing new about the subprime crisis in itself. We have seen an acceleration of a fundamental trend. And if this subprime disappears, that trend still continues for reasons we'll come to. Now, 75%, as we know, of all US and UK wealth is owned by those over the age of 65, which, of course, is why we're all in business. And we also know that 65% of those over the age of 65 are women, 75% of those over the age of 75, 85% of those over the age of 85, and 148% of all those over the age of 101 are also women. And the reason is that testosterone kills men quite quickly. It's true. If you don't believe me, come and talk to me afterwards. Okay? So what that tells us is that you're in the industry of looking after the wealth of very old women. Primarily because older women will own or do own or have rights to the profits of or the equities that are based on just about, well, most of the wealth in many countries. But that's the good news, but there's a challenge, which is these people here, they don't get it. In my country, half of the people in the photograph aren't even thinking about pensions because, as you can see, their average age. But even if we average out 18-year-olds right up to 60-year-olds, only 45% have some kind of regular pension saving. So when I say the first crisis is cash in, it is a crisis. I know there are lots of problems like a lack of money and job insecurity, but it's a fundamental reason. If you ask my friends why they haven't got a pension plan, they say, well, which one would I choose? And the charges are so monstrous, they're so outrageous. I'd be better off investing in a tracker of my own or just buying a house. And the future isn't necessarily about logic. It's not about even your performance charts. You can have the best performance charts in the world, but if people don't trust you, they won't invest. Why? Because, as you so well say, yesterday's performance cannot guide us to the future performance of your fund. Therefore, they have to have a belief not in your past, not in your history, but in your future. They have to believe that you can hang on to your best investment team in the world for another 3 months. If you're RBS, that could be tough. So while companies like to communicate results, the media like to reveal the truth. And that's an emotional and uncomfortable thing. Trust, as I say, really matters. Put your hands up if you watched a YouTube video in the last 6 months. Put your hands up if you watched a YouTube video in the last 6 days. Quite a few, half of you here. YouTube's interesting because it's TV for the masses. It's the largest TV station in the whole world. It started with 2 computers in someone's bedroom and was bought 2 years later, as you know, for $1.6 billion by Google, which is a very shocking thing for the owners. I spoke to one of them recently. But the thing about Google videos, if they were made about your products, and some of them will be, not by you, of course, it's the comments on the videos that bring the videos alive. You see, Google can't search video. It can only search words. So if one of your customers, institutional customer, it might be someone who's got a pension product somewhere, if they put up a video, Google will search it by the headline of the video, but it's the comments on the video, as I say, which really make it happen. And those comments will rank the video, star it, and all the rest. And that's what gives videos prominence. If you travel a lot in hotels, as I do, you probably type the name of the hotel into Google to check it out. Put your hands down. If you've typed a name of a hotel into Google in the last 8 weeks, put your hands up now. Put your hands up if you landed up on a TripAdvisor site or some other kind of comment site. Put your hands up now. Thank you. Now, when you type in the name of the hotel, the online community is doing exactly what Google video commentators are doing. They're creating an opinion, a community view of the hotel, which is so powerful, so many millions of people are doing this every hour, that Google gives it a higher ranking than the hotel site. And in many cases, you have to hunt all the way down to find the official site. So the hotel has to kick back by buying a very expensive box on the right, which makes Google very, very happy. Now, you have 3 choices. You've booked yourself into a hotel in Istanbul. And as you type in the name of the hotel, you notice 3 things. The first 2 listings come up, TripAdvisor, as usual. And the first is a fantastic comment, and the second is not so positive. On the right-hand side, you have the official marketing site from the hotel. So which do you click on first? You have 3 choices. If you click first, wait for it. If you click first on the official site to find out what the hotel is like, okay, or if you click on the very positive comments, or you're worried about the rats. Okay, so here goes. This is a vote. I'm doing a global survey of the last 10,000 executives. Please put your hands up now if you'd like to vote for the official site as to where you go first to find out the truth about the hotel. Thank you. Put your hands up now if you go straight for the positive site because you are an optimist by nature and you believe it will probably be okay in the end. Thank you very much. Put your hands up if you're really worried about the rats and the cockroaches, quite frankly, are outrageous. What you've shown me, my friends, is this. I can't tell you the future of financial services, but I can tell you the future of marketing of pensions. And I can tell you in your industry, because you've just shown me this, that in an online world, advertising is dead. What you've shown me is that you would prefer the opinion of a total stranger over anything that the official website puts up from, let's say, Barclays Bank about one of their pension funds, correct? That's what you just told me. By the way, who wrote this wonderful comment? The hotel, of course. Now, TripAdvisor tried to prevent this by locking out people from the hiltonhotel.co.uk from writing about the Hilton Hotel. So what did the manager do? Yes, that's right. He asked his son's girlfriend's brother to do it. So we know that this first comment is complete rubbish. And what about the one talking about the cockroaches and the rats? Who wrote this one? Of course, the competitor. It was the Marriott. No, I'm sure it wasn't, but it might have been. It might have been the marketing department of one of the big marketing companies that I work with that have no idea how to respond to this kind of stuff. Because you've already shown that you couldn't care less what's in the newspapers. A newspaper ad simply drives people not to type in hilton.co.uk, but to type Hilton, Istanbul into Google. And if, I'm sure it wouldn't be, but if the Hilton Hotel in Istanbul, as a search, produces stories about rats, then the more they advertise the Hilton chain in the Financial Times, the worse their product becomes. Are you hearing what I'm saying here? So what we're learning is something else too, which is that even though you knew, of course, that the positive comment was written by the hotel itself, and you knew that the other comment was a complete pack of lies, it was just written by a competitor, but nevertheless, 95% of everyone in this room went straight for the story about the rats. So we begin to learn something about ourselves. As I said, the future is not about facts, it's about emotion, and the rats is an emotional thing and draws us. My friends, we could just as easily do this about a financial services product. We could do it about a named pension fund. I hope you do Google each other every day. Put your hands up if you Googled your own organization in the last month. It's really important. These stories can creep up on you and start to explode virally within the space of an hour or two. So what we're beginning to understand is that the community itself is making a very big judgment, which is not necessarily based on the facts. But here is another unfortunate thing we also have to cope with, which is that, as we know, there is a problem sometimes with yield. I lecture to just about every industry in the world, from retail to banking to real estate to just about everything else. And I'll tell you this, I'm always worried if there's a lack of confidence in a product. Life's too short to sell things you don't believe in, and actually, if you don't believe in them, it's very difficult to sell them. Really. And then don't be surprised when half the country don't want to buy and play the game. So I believe this is a fundamental issue. I'm sorry I haven't got the answers to it. Those are within the hearts and minds and the intelligence that's represented here. I'm just saying it's an issue to sort out. That we have to find a way to ditch the products that we're not comfortable about, completely reform the charging structures and everything else of the products we think could be redeemed, could be made ones that I would put my own money in tomorrow, and then mega sell the ones that we really feel we've got right. And I know there are always uncertainties about funding teams moving from place to place. Okay, that's the first of the crises. I think it's fixable. It has to be fixed. It's nothing to do with subprime. It's been there for a decade or more. The second is to do with cash that we make, and of course the two are connected, because if we can improve the return, then we will end up solving a big trust issue and perhaps some of your own uncertainties. And here I'm reminded of the fact there are 1 billion children alive today. Most of them are going to live in cities, or already do. There's more children alive today than there's ever been on the face of the earth. All of them will be adults quite soon and entering the consumer society. And this will drive the biggest expansion of infrastructure our world has ever known, and it's going to happen in the emerging nations, as we know, and as it comes back, as it will after this short hiccup, which has been only a reduction, not a true downturn in these countries in terms of investment in roads and rail. If you think of China and things like that, it's been using a quarter of the world's cement. Extraordinary, but not just cement, but copper, steel, magnesium, lithium, just about every kind of commodity you can think of, carving up huge chunks of the Australian desert for coal and shipping it as raw ores of various kinds into the coastlands of China to feed this mega hungry giant which hasn't stopped growing for 1 nanosecond throughout the worst part of the global downturn. We're seeing 300 million Chinese citizens moving in 10 years alone into cities, every one of whom will need somewhere to live. We're seeing another 500 million people in Africa on the move. And as this happens, we start to think about resources, of course, like there might be no tomorrow. Now, I don't care what your views are about the science of global warming. There is a debate. The science is still yet to be proven. The science can only be a best guess at where we might be by 2050, by time which many of us will be dead. If you want to know the future of investment, we have to go somewhere different. Forget the science. The future in the next 5 to 10 years of this stuff, of green tech, is of course driven by emotion. Emotions are linked to the reaction of the public to the science, and we have to ask what they're thinking and feeling, and the answer is they believe it. Not all of them, but a lot do. Because governments are populists, they go with the flow, which is why governments are changing policy. They're not changing policy just by conviction, they're changing policy for the fact of survival. And they are driving, our world is driving a $40 trillion carbon boom. That is a minimum calculation, my own, of the investment, the total spend of our world in the next 30 years on green tech. A lot of this comes for free. A huge chunk of this has a payback period of less than 4 years. Another massive chunk has a payback of less than 10. Every one of you here will replace the heating systems in your home in the next 20 years because they're programmed to fail. Every one of you in the next 20 years, by 2030, will have a completely different green tech-enabled piece of heating technology in your house, which will offer you, unless you've got the very latest condensing boilers today or heat exchangers, it will offer you a massive increase in your heating efficiency and even change the very way in which you heat your house altogether. We're talking about the electrification of the whole of society. We're talking about a massive move not just to low carbon, but to decarbonize. We're talking about a world where every car and every train in the whole world is run on electricity. We're talking about a world where potentially every watt of power is coming from non-carbon sources. Can it be done? Absolutely it can. Will it be done? A lot of it will happen simply because the market will drive it. And the higher energy oil prices go above $60 a barrel, the faster it will happen. And every dollar a barrel above 75 is pure profit. It's pure gold in the pockets of many green tech investors around the world. And you're going to hear a lot about storing gas, carbon dioxide underground. Yes, it's a huge, huge, huge thing. We're going to see at least 500 billion spent on that in the next 20 years as a way of keeping coal companies in business for a little bit longer. Wind power alone has the power to generate at least 30% of the whole of the European power. Denmark on some days is exporting power from wind. Some days Denmark is producing over 100% of the entire national requirement just from wind. You say, well, yes, but I heard that you couldn't store it and you have to balance these things. That's fixed, my friends. We already have the technology, which is why solar is coming online, to transport power with almost zero loss over 3,000 miles. It's called high voltage DC rather than AC. It's a completely different technology. Siemens and other companies, you should watch them if you aren't already. We have the power already from just 25 times 100 kilometers of desert in the Sahara. We have the capacity already using proven technology that is here already without any more innovation to power up the 20% of the whole of the EU from the Sahara. Would it cost a lot? Yes. Will it pay back be nice? For sure, because the energy is free. What's the energy cost at the moment? Too high. Break-even point, probably 2015, maybe 2020, but we will get there. In the US, you'd need 91 miles by 91 miles of solar to power the entire United States. I'm not saying that that's what will happen. Of course, we'll have a greater mix than that. You say, well, what about storage? In Germany, using huge salt caverns, many of which are already tested and in use, and compressed hydrogen gas, Germany will one day have the capacity to drive the entire German electricity system for several days without generating a single watt. We are on the edge of a massive revolution, and the next 10 Bill Gates of the world will happen through green tech investment. Just look at simple things with a payback period of 4 years. We could cut the EU energy losses by 3% with a payback period of 4 years. In other words, it's free. If I'm the local council, and Andy will lend me the money, or rather lend you the money to do the work for me, I pay you back on a contract out of the energy savings by comparing the next 4 electricity bills for next 4 years with the previous 4. You pocket the difference by law, and the rest is mine to keep. We save 3% of EU power at zero cost. I could give you hundreds of other examples. What a fantastic business for someone like Philips. Just steer clear of biofuels using food. Biofuels from food is a dead technology. It was insane from the very start. Last year, 18%, 1/5 of all US grain was burnt in cars. At the same time, we had the biggest spike in food prices that our world has seen in a generation. Does that matter? It does. I was lecturing to the Pentagon recently to 500 generals and others responsible for land security in half the landmass of the world, and one of the primary issues was this: how do we reduce international tension? They were worried because there have been food riots in 33 nations with one country toppling, one government coup as a direct result of food prices. Caused by, who knows, lots of things. But the UN said, and remember the future is not about UN science, it's about emotion. The UN said that they blamed up to 70% of this food spike on biofuels policy. You are required by law, as from next year, to burn 5% of all your fuel in your car in the EU from food. Why? It's biofuel mix. It's an EU regulation. And because almost all the biofuel right now is from food, all of you will be burning food in your cars, whether you like it or not, because of this insane regulation. It's history. It's already out of date. It's over. And anybody who thinks they're going to make a lot of money out of food into fuel in Europe needs to think again. Now, it's different in Brazil. The future is about emotion, my friends, and we need to think about how emotions go when you see photographs like this, photographs like that. Food prices, starvation, hunger. It's a toxic mix. Carbon trading. We are already trading carbon offsets to the tune of 127 billion. Just a couple, 2 or 3 years ago, it was only about 7. We will be trading upwards of $1 trillion a year of carbon every year by 2020, and I suspect it could be by 2015, 16, 17. Most of it will be simply churned from one fund into another, one trader into another. But a huge chunk will be directed to fund new green tech investment and will drive the profitability of lots of the technologies you invest in that can't quite make it commercially yet. So we're in an interesting time in terms of new investment opportunities, ways to make more money, and at the same time, we will have continually the issue of charges and trying to make our funds more economic. Thirdly, and perhaps most importantly, and I want to finish with this, is the issue of cash out. So we've got everybody now. We've got up to 85% of people in the UK are now investing because we got our performances right. We got our stories strong. We ditched the funds we didn't believe in. We're only selling with passion and conviction. We've tidied up some of our charges and actually we're much leaner and more efficient. So we're humming along, but the big challenge now is whether the funds are large enough. Can I just have a look now at the issue of aging and what's happening to the science of aging and why I believe that life expectancy forecasts being used by European governments are wrong. Now, I've had this discussion with just as many actuaries, government actuaries, as there are in this room today, and I don't think I've ever had anybody disagree with what I'm about to say. There's an odd situation where it's hard for a prime minister to adjust an official view about forecasting because it affects, of course, pension fund liabilities of lots of companies listed on their stock exchange. It affects the government balance sheet and other things. So there are lots of reasons why it is difficult to have this conversation openly. And I assure you, chairmen and CEOs and pension funds, and I work with pension funds, they're all in the same fix, which is if you keep the maths as it was 2 or 3 years ago, it could be quite helpful, even though in private we're starting to think differently. So how differently should we think? Where will the future of life expectancy forecasts go within the next 3 years? This is my view. By 2026, on current forecasts, without any medical technology improvement, we will see 90 million people in Italy over the age of 90. Most of them will be women, of course. That's the bad news in terms of support. The good news is those 90-year-olds will feel like 70-year-olds in many ways today. Some of them will feel as young as your grandmother used to feel when she was 60. When will you actually feel old? That's the big issue. I talk about first life, second life. First life is 20 to 60. That's the life you thought you had until you retired. Second life is early retirement, came at 60. Very nice. You travel around the world 8 times and life got very boring, so you started a new company. You think I'm laughing? I'm not. You look at the age of entrepreneurs today, many of them are in this age group. And a whole new generation comes forward who are in part-time work, full-time work, and by the way, giving time to an organization you believe in passionately without any pay is also work. It's just work donated. Put your hands up if you have someone who's retired, who is a parent, who says, I've never been busier. Why? Because we are programmed to work. We enjoy work, and actually purpose comes out of feeling we make a difference. When we make a difference, we do something to help someone else. That is work. You may like doing it, in which case it's great. But it is still work. And people are working. And many of them are working a little bit or a lot. And my grandmother was working till she was 83, but she was 2 generations ago. My grandmother retired as a doctor at the age of 83, which may really worry you. She was only doing medical tests for insurance. She only did it part-time. She was mainly playing golf. But that's yesterday. My friends, you tell me tomorrow. Tell me, 2 generations on, at what age a doctor like my grandmother, who's now only 40, at what age do you think they will actually stop their last medical appointment? What do you think? 90? Easy. Could be 95. You say, oh, I can't imagine it. 2 broken hips and Alzheimer's disease. No. We're talking about biologically 65. Talking about biologically 70. Now, what that means is that all this discussion about, oh, we're going to have to improve the, delay retirement until 67 and a half or something like that, and that will cause riots on the streets of Athens and Paris. Listen, life is more complicated than that, which is good news. So we're thinking mental age 40, physical age 50, actual age 65. But here's the big question. What can medical future do? We know that the life expectancy of everyone in this room improves by 12 months every 5 years. That's less today. And that's history. 12 months added life expectancy every 5 years. I want to show you 3 years of medicine, and you tell me the next 30 years of progress. Okay? You're the futurists. I'm just a physician. What would you do for a treatment which restores hardened arteries? You just drink it every day for 4 weeks, and after that you throw it away. Your blood pressure used to be 180 over 20, so you were on the high-risk register. Now it's gone back to 120 over 70. Your blood pressure is lower than it was when you were 21 years old. And you think that's amazing. You throw the medicine away, it's a permanent re-engineering of the blood vessels. What would you give me for that? And by the way, what would you give me, man or woman, if you notice something quite extraordinary? When you look in the mirror, the wrinkles have all gone. When you look at the back of your fingers, the wrinkles have gone. The back of your knees are tighter. Every part of your anatomy has had a body lift. Think about it. You say, well, that's fantasy. No, it's not. The drug is called Alteon, A-L-T-E-O-N. It is in clinical trials. It succeeds very well in mice and rats, doing both a total body lift and a re-engineering of the arteries, making them more elastic again. Okay? I'm telling you history. You tell me the future. They're interfering with one of the mechanisms of aging. There are only 7 of them. And when you start tackling a mechanism, it affects everything in the body. Now, I've got some bad news for you. Don't invest in Alteon. It's very disappointing in human beings. So far, it only produces a very small effect on the heart and no effect on skin. But it gets us guessing about common pathways, about re-engineering the very basis of human life itself. What about stem cells? I can take bone marrow cells from your body and pop them into your heart from your bone, and your heart will start beating more strongly after a heart attack. That's history. That's been done 5, 6, or 7 years ago. You will know that. You tell me the future. What about animal studies that show recovery from stroke using stem cells? Embryonic stem cells, now using stem cells from the animal itself. A friend of mine has a son, tragically, who's quadriplegic, spinal cord cut from the neck following a car accident. She and I have been talking to medical teams in the US who are starting to get full recovery, or not full recovery, but movement in people who have been paralyzed for a year, 18 months or more, after repairing them with spinal cord, with cells into the spinal cord that have been taken from the person's own nose. Extraordinary? Yes, extraordinary. I'm just telling you the last 36 months. You tell me the next 36 years. Your brain repairs itself daily. We know that. We know it from studies of the woman with the female brain. She had leukemia. She was irradiated. She had no bone marrow. She had a transplant from a man. They then tested her body when she died, and they found the male cells in her bone marrow had produced brain cells inside her head. Amazing, astonishing stuff I would never have believed. We are rewriting the textbooks of medical science in the last 36 months. Tell me the next 36 years. Some animals don't get old at all. There's a rockfish project. I think they will win the Nobel Prize for aging. There are teams locked in a race against time to decipher the genetic code of rockfish and whales. Why? There are types of rockfish that die in 20 years, but others live for 100. There are types of whale that die in 20 years, but others live for 200 years. They look the same. They are from the same species. They drink the same water. They swim in the same sea. Something is happening. It has to be a genetic trick. We know that you are the same as let me get the math right, 86% the same as an earthworm. You are 89% the same as a centipede. You are 99.8% the same as an orangutan monkey. We know that the genes of life are basically the same in all living creatures. That's why we can cut and paste GM to make GM food. We can cut and paste a human gene into a rabbit. It works fine. We can put a rabbit gene in a cucumber. Some of the genes will actually work. We can take a human gene and put it into a microbe, and we can brew human insulin the same as brewing wine. We have the capacity to re-engineer the very basis of life. There is a gene trick, my friends, these whales and rockfish and turtles have discovered, and parrots. And if we crack it, we will know the miracle of life. We will know why it is that they don't get cancers. Why it is that there is no evidence whatsoever of a ticking clock. They die. They die of childish illnesses like infections. They die of accidents. And they die because they get eaten. But they don't die the way you do. Almost all of you have seen doctors in the last 4 years because you are getting old. Almost all of you, the only reason you have seen a doctor is because of a disease of a ticking clock inside your cells. One of the 7 mechanisms of aging affecting you in one system after another. Interfere with one system, you affect the world. Now, personal question. How old are you?
31.
31. What's your name?
Simon.
Simon, 31 years old. Where were you born, Simon?
Cambridge.
Cambridge. Clickety-click. The British government gives you 50 years. Average life expectancy, assuming you're in good health and you don't do anything crazy, like hang gliding. You know, of course, what's your company you work for?
I'm Mercer.
Mercer. Oh, my friend, I have good news. Because you work for Mercer, I guarantee you an average extra life expectancy of 5 whole years. You can tell me why, of course.
I'll be amazed.
And I'll tell you why. Because you're in the upper socio-demographic group. There are a whole load of people who live. I know Cambridge very well. I trained there. I can tell you there are housing estates in Cambridge where the life expectancy is 67 if you're lucky, because of alcoholism, social deprivation, and poverty. And I promise you, to keep the average life expectancy for Cambridge men about 81, we have to add a whole load of years onto you. That gives you 5. That gives you 55 years. 55 years, Simon, you have right now. Now, remember, these people have been looking at the last 3 years. I asked you to project the next 30. Put your hands up if you think that medical technology might just give Simon an extra 5 years of life expectancy over the next 30. Oh, you've got 60 years. Remember, knowledge is doubling every 2 years. In the following 10 years after that, we will go from 2, 4, 8, 16, 32. We will go 1,000 times more knowledge than in the previous decade. He will have 1,000 times more chances of improving his life expectancy in the following decade. He has 55 years. Put your hands up if you think in the following 20, you might just find him another 5. We've just given you 60 years, Simon. How do you feel? Average, you're up now for 2070. When he gets there, he's still got 10 more years, average. Remember, that's an average. If For every one of your friends who died in a hang gliding accident between now and then, we have to add even more years onto your life. Put your hand up if you think we might get another 5 years out of those final 10 years. We now got up to a life expectancy of, we got you up to, what have we got up to now? 65 more years for you, and you're 30. So we got you 95 average life expectancy. Put your hands up if you think there might just be a wild card in there somewhere. I mean, you don't need much faith to believe in that. A wild card or two that might some point in the next 65 years do something quite extraordinary to his capacity to live and might give him another 10 years in the process. Put your hands up if that could happen. My friends, your pension fund at Mercer is in deep trouble. You see, they're working on an 81 average, and they aren't employing poor people in Cambridge. So they're already down by 5 years, and this room has suggested, that the Mercer Pension Fund is out by 15 years or more, and you know that for every year you add to life expectancy forecasts, what do you do to the deficit of every pension fund in the UK? It's 3% deficit, isn't it? For every year. And we just added 50 more years on without thinking about it. I think the life expectancy forecasts are fundamentally incorrect, and we require vision to see the future. So, in conclusion, I must finish. 3 crises we saw, but I think they're fixable. The first one was getting the money in, and it's a question of rebuilding trust. And of course, that's also about openness and dealing with performance and lower charges. Secondly, we saw that there are tremendous opportunities, I think, to increase return for people who got the vision to spot the big trends and start to make some of those plays in an entrepreneurial way. We can't bet the whole fund on it, but I think there's some very, very interesting things to do here. And what an amazing sense of achievement you'd have to say, we built Desert Tech Project. We funded 50% of their startup capital in the Sahara Desert, and we were responsible for bringing alongside the consortium that drove the fact that we now have 30% of all the solar power, all the power in Europe comes from that investment that we first made. What a nice thing to be able to tell your investors. And the third thing is, I do believe it's very good news, what we've heard about Simon's life expectancy. Because what it tells us is that you're in a growth industry like green tech. And that as green tech continues, biotech does too. And while you may make money out of green tech, you're also going to be selling an awful lot of product out of biotech. So with that, I'd say all the best. I think it's an exciting opportunity, a challenging time. We have to fix these 3 problems, but I believe that we will. And as we do that, our abiding theme will be to provide for the future. A better future, not just for the individual, but for our families, to invest in a way which enhances the communities in where we live, and also build sustainability. Thank you very much.